Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only 2 kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan, not changing it because you're having an emotional meltdown. After spending over 15 years in trading, 10 years of that trading for a living, it's absolutely exhausting to see both respectable and non-respectable traders say the same thing. You can't grow a small trading account. This video, I'm going to prove to you using math and the 5% rule that it's possible to grow a small trading account and eventually go on to trade for a living. It took the arrival of prop firms and millions of dollars in payouts to elevate your trading potential with E8, the best prop firm you've never heard of, where innovation meets opportunity. Access a wide range of markets from Forex to futures and more, all through their comprehensive evaluation programs. Tailor your trading journey with their customizable evaluation programs designed to align with your unique strategies and trading goals. Demonstrate your skills and swiftly transition to managing a funded account, earning up to 100% of the profits. Trade with confidence on their state-of-the-art platforms like CTrader, equipped with advanced tools and real-time data to improve your trading experience. Enjoy fast and reliable payouts with the ability to request your first payout in just 8 days. Join a thriving community of traders worldwide with 24 hours a day, 5 days a week support and valuable resources, all at your fingertips. I am super critical of prop firms, but E8 is definitely the best and has stood the test of time. So sign up now using the link in the description below to get 5% off your first evaluation. Do it now. Profitable traders are people that believe that it's possible to make money in trading. This is such a paradox considering traders are some of the richest people in the world outside of the recent tech boom.
I don't have a clue what you're talking about, Phil. Not a fucking clue.
So, if it is possible to scale a small account to long-term consistent income earning, how is it done? Let's dive into the video. I'm going to take you back to my last video on building a winning trading strategy that works. This was backed by 1,000 trades. You can watch that video in the description below. In that video, I talk in depth about the POR, or the probability of room matrix. The POR explores a hypothetical 100 trade scenario and it attempts to statistically calculate a trader's risk of blowing up by contrasting risk to reward against probability to find the optimum combination to prevent ruin. I know this concept has probably been bastardized by educators or thrown in the bin by naysayers, and the maths is really simple and undeniable.
Look at yourselves. You know, you pass yourself off as cynical people, but you still have some faith in the system, don't you?
Let's explore this. You randomly flip a coin after 100 flips. You will likely end up with 49 times heads and 51 times tails. Essentially, somewhere near 50-50. If this is true, then a series of random trades with predefined exits and entries should result in a 50-50 outcome. If you don't believe me, then check your trading account over your trading lifetime. Most traders, regardless of strategy, never have made more than a 50-50 to 46 60 win-loss ratio. Take your trading journal to the next level with TradeZella, the ultimate tool to transform your trading journey. Effortlessly log your trades with automated journaling, consolidating all your trading activities in one place, even if you have multiple accounts. Gain deep insights with over 50 detailed reports helping you identify strengths, weaknesses, and refine your strategies. Revisit and analyze your trades in real time with TradeZella's Trade Replay feature, pinpointing execution flaws and improving decision making. Develop and backtest your trading strategies, ensuring they're solid and tailored to your unique trading style. Transform your trading journey with TradeZella. Start today by clicking the link in the description below. This supports the channel and TradeZella. Do it now. So if trading is a random walk, why do most traders fail? In the words of Sherlock Holmes, when you eliminate the impossible, whatever remains, however improbable, is likely the truth. I know that most traders fail because they take profits too early, take large losses, and don't factor in the cost of trading. This is just a long phrase for inconsistency. I'll delve deeper into this on my video, 3 Deadly Mistakes Killing Your Trading. It's in the description below and the end card. It'll blow your mind. In order to escape what is essentially randomness and inconsistent behavior, we need to be mathematically precise. To do this, I use what's known as my 5% rule. Let's say you have a $2,000 small account. Divide this into 20 smaller individual trades. Example, $2,000 divided by 20 equals $100 plus cost per trade. For argument, that's $105 per trade, so in theory you should be risking $90 per trade to keep things mathematically precise. The next step is to select an asset that's an inflation hedge that will naturally trend. I discussed this in detail in my video, Building a Winning Trading Strategy That Works. Pretty sure I mentioned that. Then go to the smallest time frame available, like the 1 minute chart. The market's a fractal, despite the popular narrative that longer term charts are more profitable or offer more profit. This is not true, and there is no evidence to suggest this. There is, however, overwhelming proof that markets are fractal. The most successful traders I know are order flow scalpers or technical scalpers. Don't know any successful small account position traders. Position traders tend to manage $300 million plus in assets under management. I don't think you have that kind of money.
When we come in, no, never.
It's important we find an inflation hedge. FX is not an inflation hedge asset. Inflation hedges trend consistently and often outperform inflation by a factor of 2 and more. For example, if the dollar inflates at 10% annually, then gold will inflate at 15% and 20% annually. Check the return on gold last year. I'm sure you'll find it grew roughly 24%, while the economy in dollar terms inflated about 12%. You can easily calculate this by adding up the month-by-month inflation rate over the year. This is not a coincidence. Trading an asset that is outperforming inflation will guarantee liquidity, volatility, and the ability to achieve the important next metric, risk to reward. If you risk $100, then you must seek to make $300. This is perfectly possible on an asset outperforming inflation by 12%. You are also guaranteed to get this every day in a fractal market on a 1 minute time frame. I'll discuss a simple visual pattern that no traders can use to achieve this in my video, Building a Winning Trading Strategy That Works. It's in the description below. So now we have all the ingredients to grow a small account. Let's look at a practical example. Assuming you follow the 5% rule and the 2 trade a day rule and have not more than one optimization metric. I cover optimization in my video, Why 90% of Traders Ignore Volume. I'll include that in the description and in the comments. I dropped a lot of nuggets in that one. You would have noticed that the market bid at market open, found a bottom and then rallied. It consolidated and put in new highs. I'm using the S&P 500 as an example. It broke and formed a failure swing. Buyers entered and got stopped out, so you're down $100. The market did a new high, failed and formed a failure swing lower. Sellers entered and made a 3-to-1 covering cost. That's $304, assuming commissions are $2 per round turn. This covers the cost of your loser and your winner. Your net P&L is $204 for the day. Your new account balance is $2,204. You can now divide $2,204 by 20 to allocate new risk per trade for more efficient scaling. I'll give you a pro tip. I like to achieve a certain target profit goal before increasing my size. For example, scale with every $1,000 gain. This keeps my growth curve more stable. You'll be surprised how fast your small account will grow if you consistently execute in a simple, predictable pattern. I hope you enjoyed the video. Now, if you did, you know what to do. It will be a good time to mention my trading strategy series playlist in the card above. Click onto it to watch the full series and hit the notification bell for the next video in the series. Well, to the next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?